Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for Monday, the 24th of May, 2021. What an interesting day. No news. So the market traded off the technical picture because it really didn't get financial news. I don't call the situation that's going on with Belarus and what's going on there having to be a financial deal. That's for Europe to deal with their airspace and what's going on. We'll get involved. You're getting your skirmishes with Iran. Iran said yesterday, the parliament, that they're not going to allow the camera work that the UN watchdog needs on to see what's going on. So they're turning it off. I wrote this morning in my newsletter, that'll last no time at all. It's a bargaining chip for the upcoming meeting in Vienna. And they're close to having sanctions removed. They're not in the best position but to do anything but show what they might do. And bingo, within 24 hours, they backtracked and granted another 30 days. The problem for all of us is if the European Union and the United States and Russia give in to Iran, what stops them from funding terrorism? It's not only the nuclear weapons. What are they doing? They're a sovereign country. How do you stop it? And if you can't stop it, why are you taking the sanctions off? That's where I come from on it. If they can stop the funding of the terrorism and all that, well, that's a whole different world. When we look at the metals backing off tonight, but you're going up in the stock indices, we're looking at currencies just sort of drifting like this as the market's waiting for more news. We get a lot of news in the morning. That might impact the market. We seem to be stuck on the yield in the 10-year note around the 161 level, but that's a pretty interesting level because the market's no longer accelerating and trying to go up into the 1.7 range. It's also not getting back under 1.5. It just seems to have gone flat. Energy, the market seems to be absorbing well the idea that if Iranian oil comes on the market can handle it at these prices. Remember, this is a futures market. They're supposed to anticipate. I find that interesting. On the S&P, we're up 1.2% so far for the week, so that's Monday and the early opening trade of Tuesday night, but you're staying nicely over the 18-week moving average of closes, which means the bias is up. When we take a look at the chart action, I'm again going to point it out. You're still caught between the peak here, the valley there, and we have not come out of that for a 2-week period. We seem to be caught in it. With the action today, the market threw out a signal that it's now back into the bull mode. Higher lows, higher highs, unless today's low, and that low was 41.4250, is taken out either on Tuesday or Wednesday. Barring that, the swing line has turned higher. Moving averages are right here. This is your battleground. You hear me say this so often that markets like to go to a number on a chart that is the differential between I'm bullish, I'm bearish. And it's, for me, the 18-day moving average of closes, and markets often fight their battle. So I think the pros are going to look very hard at buying at 41.58, the 60 level. You have to round it to 50 on futures. And I think they're wrong if you get under 41.4250. When we take a look, I'm sorry, I hit the wrong way. The objective could be the 42.35 level. That puts you right back up to the May highs, if not higher. That's interesting. And when I look at momentum, it's overbought. This is not an easy chart. This is as difficult as it gets. Overbought. Will you go up to make new highs? Resistance waiting for you there. And if you take out 41.4250, you stop out of the trend. Not an easy chart picture at all. I look at the slow stochastics on NASDAQ. Overbought. When I see an overbought reading, the first thing my eye goes to on a chart, why? It stands by itself. Number two, when I see that, it's just telling me, okay, if I have new money to commit, assuming a rhetoric question, do I want to do it in an overbought condition? Probably not. Am I scared of doing it here? Not at all. Am I scared of doing it when a market's running the Bollinger Band? Well, I created a course on how to do that coming in on the breaks until you lose the embedded reading. The answer is no there. This is the scariest one for me. Assuming the market pulls back and the pros buy it at 13,449. Their risk is going to be back under 13,350, 650, right under that. Objective 13,903, and again, that's going to put you at new highs for the move. Is this market capable in the last week of going up for new highs? Another question. When I get to the Dow, I don't have a trend, or at least the chart doesn't have one. You have a pattern of a higher high and a lower low. You challenged twice the lower Bollinger Band, rejected. You'd gone up here to the upper band, rejected at the end, and you keep coming back to this 18-day average of closes. I think you see it. Unlike the other indices, you're not overbought in this one, but you're also not in a trend. You have a higher high and a lower low. In the Russell, no man's land, 18-day average of closes again. Momentum up, trend up, bias up. So if the market's going to be bought, I think it's going to be bought right here at the 2220 level, let's call it, 2219.80. I think if the market's wrong, under the 2200.50 is where the traders will throw in the towel. That's a $1,000 risk. I know it doesn't look like it. It's big money. I got to tell you, it's probably a good time to do this with your hands. I'm just not certain. I'm rarely certain, but I don't like what I'm seeing. I mean, given a gun to your head, I'm bullish all of them until you take out the lows that we made today. Is that fair enough? VIX cash, you pulled all the way back under this 1881. So in the panic moment, you got up here. I told you I thought that the pros were writing calls. I think they took their money off at the 100-day. It even offered the 18-day moving average of closes, and you've stepped out of a trend, trendless now. In the 30-year bond, look at how the market's rallying. It's caught in the narrow bands of the Bollinger Band without a trend. Lower low, higher high. Back here, the market had an outside day down. You came up and took out that high. When that occurs, unless you go back for that low, often the target's going to be the closest moving average above the market, the closest of that or the Bollinger Band. In this case, it's the Bollinger Band. We'll see if it can get there or not. Obviously, if it does, that's going to help the stock market, so it's something you want to see. In the 10-year note, we had an outside day down. We did the same thing. Same run in the market. Are you seeing that? In a sideways action. Dollar index is still in the bear camp. It needs a down day tomorrow to embed. That will change it from being oversold to locking in a downtrend. And tomorrow's a crucial day in this market, so I'll be all on top of it, watching it to decide what to do with that. The flip-flop of the euro, okay, if we take a look at the euro, both numbers are not over 80. Today, Monday, they were both over 80. I don't know what they'll do tomorrow, but they don't have 3 days of it. So you're just overbought in a market that is what? Got upside bias, but lower highs, lower lows. Difficult trading pattern right there. The British pound, in the pound, you're starting to lose the embedded reading. Do you see that? So you've had this embedded reading all the way through this, which has been powerful. Now if the market closes with a reading under 79, you're at 79.94, I would not want my traders to hang in there, and that's something I teach in my charting course. Do I tell them to buy when the market's doing that? I don't do that either. So in this, the market either picks up and runs, or we're about ready to correct back to the 18-day average of closes. So you put your hands on that and you see what goes on. Bitcoin continues to run the lower Bollinger Band. So I know that people get excited as it's doing this, but folks, it's just running that in an oversold condition that's in a downtrend. Just something to keep your eye on. The differential now between August Brent, I've moved away from the July. The last trading day is, I think, the end of this week. So it's time to go to this. So I went to August Brent versus August crude oil, just to look at the differential, and you can see it's down to 267. What broke that market, in my opinion, because it's how Brent is in gap narrowing or widening, and it's narrowing the differential between Brent and WTI, because Brent is coming down, or its momentum's here because more Iranian oil could come there. And if the world's going to be so good, our WTI's going up in price. That's basically what's happening, is the two have broken down like that. When you look at the Brent, you've got a higher high, lower low. Now, when you hit these Bollinger Bands, first challenge of a Bollinger Band, what do I teach in my charting course? In the enhanced Bollinger Band. First challenge, bingo, out the pros go. And that's all that I think happened there. WTI, same thing. And if you get up here, I think they'll blow out of the long side of the market. I don't see a trend. That's the bigger thing. I'm just seeing the market doing waves within that pattern right there, not in a trend. Gasoline, first challenge of the lower Bollinger Band was on Thursday. You tell me what that market did. It hasn't looked back. It came right off of that and came right back to the neutral point, that 18-day average of closes. You know, I get asked a lot, what's my favorite technique? What would I, as a trader, have to pin one thing on if I had to use one thing? That's why I created the course. This would be it. Of everything else, the swing lines, the different moving averages, this is it. Now, it is a conglomeration of the Bollinger Band, very important. It's what everything's based on in this course, and what the slow stochastic is doing, and then how to come in. The word is come in, out of trade, and where to come out. So it's 13 videos. It teaches you how to do that. Each one's about 7 minutes long. It's simple to learn. What you want to do with it, that's going to be up to you. How do you get this? Well, you get quite a bit with it. That's number one. But all you need to do is go to our website. Under the word education, the course is there. I created a scenario as to what it's all about. You can take a look. But if you were to ask me, and a lot of people do, this would be it. Now, before you go, the What's Up app, not app, but the What's Up seminar that I'm going to hold, I think it's going to be this Thursday. I don't want to send you an email tomorrow and give you one day to adjust your schedule. Figure 12:30 on Thursday. There'll be an email invite. You got to click it, reserve your seat. There's only going to be fixed amount of seating. They go like that. It'll go out, obviously, to the people on my mailing list. The only way you get on my mailing list is going to our website and signing up for one of our free offers, or being in the base already and having been a subscriber. Obviously, I'll send it out to the subscribers first. When the seats fill, they fill. So you will get everything. I am intending that. It'll be between 15 and 30 minutes, no longer than that. It's like a lightning round. You bring in your question, I'll answer it. Ideally, you'll bring in symbols, we'll construct a chart, we'll put it together and take it from there. I can do longer term, shorter term charts. If this is very successful, we'll do them maybe twice a week, because I love doing things like this. I'm Ira Epstein. I will see you tomorrow.